Oh yes, guys, the Sydney Sweeney investment strategy is absolutely paying off. We can see our Sydney Sweeney stock is up like 25%, and you can see this is the video that I posted, right? Sydney Sweeney just gave us the investment opportunity of a lifetime. So what was the investment opportunity, right? Is this American Eagle Outfitters stock, right? And in this video, we're going to be talking about American Eagle Outfitters, and I'm going to let you know about my opinion and also what I think moving forward. So obviously this YouTube title is super dramatic, but if you did catch my video, you'll be up about 42% when the market opens, right? Obviously we have to see how pre-market trading and everything goes, but if the numbers hold up like they are currently, then yeah, we will be seeing a 42% gain in a very short time, right? Because I actually posted this video on like 6th of August, right? So in this video, we're going to be talking about AEO's earnings, as well as what are some of my thoughts on this AEO stock right now, right? So if we take a look at their second quarter earnings, their operating income is 103 million and increased 2% revenue to 1.28 billion, right? This exceeds expectations, right? And I'll tell you why, right? Because 2% is a very sleepy number, right? And year to date, their share repurchases have been $231 million, reducing the share count by 20 million, right? Or approximately 10% of the outstanding diluted shares, right? So just judging by how fast management bought back this stock, I think they thought the stock was undervalued, right? But that was back here, right? $9, $10, maybe $11, right? And when we take a look at the full year operating guidance, it's actually 265 million at the top end, right? So if we take their market cap at tomorrow's open and then we divide by 265 million, right? I think we get around a 10 times PE, right? So is 10 times PE cheap or expensive for a stock like this? It depends, right? Because they continue to grow like 2% revenue year over year. I think it's just like fair value, right? It's not undervalued. It's not looking cheap at all, right? But if they grow their revenue by like 10% or 20% the next quarter, then it's a very big difference, right? So if you take a look at total revenue, I think it's down like 1% from last year, right? And some people might be asking, okay, down 1% last year, and the stock is up like 25% after hours. How does that make sense, right? It's because the expectations were actually for it to be down 3, 4, 5%, right? And then when they come in with numbers like this, suddenly it looks much better, right, compared to what the expectations were. You can see the gross margin also expanded 30 basis points, which is 0.3%, right? This is not that much. And also SG&A also dropped a bit, right? So revisiting my thesis, what did I say when I buy the stock here, right? When I bought the stock here, I said, I don't feel like the advertising has been recognized by the market, right? The amount of revenue that they will grow, right? So honestly speaking, these numbers were a bit shy of my expectations. I expected maybe a bit more, right? Considering how viral all the ads and everything was. And when we take a look at the Google Trends, I want to point something out, right? You can see every year, right? In November, you can see that the Google Trends for this company spikes, right? And I'm just going to presume that it's because November, they do all their advertising in November, right? But this year it's different, right? You can see this year, their advertising was done in August, right? So we have to ask ourselves, right, why is that the case, right? So obviously all these facts were out there even when I bought the stock, right? But I didn't notice because I wasn't an owner of the stock, right? There's this saying where when you own the stock, you notice a lot more things than if you don't, right? And just looking at the numbers, I think they did it because it was a desperate move, right? Because they needed to, right? Not because, we see a great opportunity here, right? Because if we take a look at the buyback, like how fast they did the buyback, and the share price basically didn't move, right? If you take a look here. So most of the accelerated buyback was done through this range, right? Here is 24th of March till somewhere here, right? This is the second quarter, right? But obviously if the shares are $17 now, they did a great job, right? Their accelerated repurchase program, right? So moving forward, right, what am I going to do with my shares, right? Because actually I haven't fully decided, but I think more likely than not, I will be at least trimming, if not outright selling my whole position, right? And why am I doing that? First of all, if we take a look at the retail sales data, right, from 2024 until now, right, actually there has been no increment, right? So when we take a look at some of the retailers' numbers, right, I was looking at Costco the other day, Walmart, and some of the like BJ's Wholesale Club and all these other retailers, and I think a lot of retailers stocks are getting hit like quite hard, right? I think Walmart was down like 5% after they reported earnings. And another thing I want to point out is that with all these companies, right, I'm not really sure of what their mode is, right? All the retail companies. So even when we take a look at some of the great companies like Lululemon, right, you can see that honestly their stock is down from 2020, right? And maybe even Nike, when we take a look, yeah, their stock is also like down from 2020, right? which leads me to believe actually retail is a very, very hard sector to make money in, right? And I knew this even before I bought American Eagle stock, right? But obviously I thought that a lot of this wasn't priced in, and turns out I'm right, right? At the market open today, this is basically the market agreeing with me that they missed something, right? Back here like 1 month ago. So the combination of these three factors, right? Retail being a very, very hard place to make money in. The second being macroeconomic doesn't look very good for consumer, right? All the big companies are doing just fine, but consumers look like they're struggling. The third thing is a lack of a moat, right? So which leads me to believe since the market has agreed with me here and I've made 40% in a very, very short amount of time, right? So I will be selling most, or if not all of my shares, right? And some people might say, oh, what if it goes up to 26 or whatever it is, like it goes higher, right? My point is not that I don't think it'll go higher. My point is I'm no specialist in the retail segment, right? And I feel like what I thought will play out has already played out. So I'm not exactly selling because I think the stock is expensive or that I think the stock is overvalued or the stock is not going to go up, right? I'm actually selling because of my own personal reasons that I don't think I'm a very specialist in the retail segment, right? Because this was like a kind of like special situation play, which I saw that the ad went viral, but the price didn't reflect that the ad went viral, right? So yeah, that's about all I wanted to share today. If you did enjoy the video, do help me smash up the like button, hit subscribe, and also hit the bell button. With that being said, have a fantastic day ahead and peace out.